Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and TradingView with over 190k reputation points. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what hedge funds and big players in the market are doing and how they're moving and shifting their orders. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Now, starting here from the monthly time frame, what we can see is that at the moment the market is testing and rejecting to the upside a quite strong historical structure level for this market. This zone was already acting as previous resistance, preceding all these rejections to the downside. Then the market broke above the zone with this impulse, and at that point all that previous resistance was turned support here. Because what we know is that in the market, when there is a strong level of resistance and that level has already been respected in multiple occasions, once the market finally manages to break above that zone, at that point all that previous resistance becomes support. So at that point, after the break, you would expect the retest of the previous resistance turn support and then for the market to reject the level to the upside. And that is in fact exactly what happened here. The market broke above the zone, went for the retest, and now we're getting the continuation to the upside. Now, if we look even more closely, we can notice how what we just got is the creation of the start of an uptrend. Now, in an ideal uptrend, you want to see a series of impulses and corrections in which every time the market is creating higher highs and at the same time it is also creating higher lows. Now, the last moves that we had here were first of the impulse to the upside that broke above the structure, the correction, then a new higher high, now a new higher low, and the next logical step would be for the market to create yet another higher high, because no market can just go up in a straight line. Every market will need impulses and corrections along the way, because every correction gives the possibility for new institutional buyers to enter into the market, potentially pushing the price forward and continuing the trend. Now, dropping down on the weekly time frame, what do we see? Now, from a weekly standpoint, the situation is quite clear. We have a market which is currently testing a quite strong historical structured zone for this market. This was acting as previous weekly resistance from which this push to the downside started. Then the market broke above that zone, and that previous resistance was turned support here, again here, and currently this level is still acting as support with the market rejecting it to the upside. Dropping down on the daily time frame, what do we see? Now, here on the daily, I did speak about gold just a few days ago, a couple of times. I spoke about it when the market was creating this M pattern. I explained all the reasons for which there was a good probability of seeing a rejection to the upside and for the market to create a push higher. And that is in fact exactly what the market did. And then again, I made another breakdown explaining all the reasons for which after this impulse, the next logical step would be to first see a correction and then the continuation to the upside, which is again exactly what the market is currently doing. And by the way, I will link in description those two previous analyses so you can go and check them out for more free education. Now, from a daily standpoint, what do we have? Now, here on the daily, the market is currently breaking new structure. This level is currently acting as previous daily resistance, and if the market will successfully break it to the upside, at that point, this previous resistance will become support here. So if the market will successfully manage to break above this level after a break on the retest of the previous resistance turn support, this is where there is a good probability of seeing more institutional longing. Now, speaking about institutional longing, if we go and see what we have, when it comes to the commitment of traders, so what the big players in the market are doing, and we look at the data precisely for gold. What we can see here is that with the last reports, net positions have been massively increased. We went from having 234.3k net positions all the way up to 247.6k net positions. So clearly, institutions have moved aggressively back to the bullish side for gold, therefore making it stronger. And as institutions are pushing to the bullish side of gold, currently we're sitting with 289,000 longs from an institutional perspective compared to only 41,000 shorts. And keep in mind that this is the data for the non-commercials. So the institutions that are in the market as speculators, basically. So actually for profit and not for commercial reasons. So let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So from a daily perspective, if the market will successfully break above this structure and go for a retest, what would I expect? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, all these general analysis, tutorials, and concepts that you see me speak about on my YouTube channel are really just the tip of the iceberg, because if you really want to learn more, I will definitely suggest that you go and check out the transparentfxtrading.com website, which you find also linked in description. Here, you will have the possibility to gain access to all my courses. So really complete courses that will guide you from the very basics of charting all the way up to more advanced concepts like building algorithmic trading strategies using quantitative finance tools like the quant analyzer to build portfolios of strategies, and a lot of really important and really interesting things that you need to know if you want to become a better trader. So this is something you really cannot afford to miss. You also have the possibility to gain access to the trading station software with the Telegram notifications integration, one-on-one mentoring directly with me, the COT data software that you often see me use on the YouTube channel, and you also have the possibility to integrate with gaining access to all my EAs, so my personal EAs, the ones that I have developed and that I trade on my own account, and also to have access to the trading show, which is essentially a live stream of all trades coming from my account directly on the Telegram channel as they are executed and managed. Here on the website, you will see that there is the complete presentation of all the EAs that I personally run. And if you continue to scroll down, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. And there is also per time slot this special discount. So at the moment, there are 10 days before the next price increase. So I would really suggest that you go and check it out as soon as possible. The link is in description, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.